This is the Value Investor Podcast with Tracey Ryniec. All things value, all the time.
Welcome back, value investors. So I'm doing this podcast on gold. Yes, we're finally covering some gold miners. Gold is over $3,000 an ounce now. That's an all-time high. However, inflation adjusted, it's not quite there yet. I kind of tinkered around with the inflation adjusted calculators to figure it out. And this isn't like an exact number because I didn't have the exact date that gold hit the $850 an ounce. That was its all-time high, I think back in 1980. But I did it from 1980 on, and it gave me a number of 3,117 for that $850 an ounce all-time high. So we're just about there. We're very close to being there. So let's just say we are basically there at the new all-time high. Many people didn't think we'd ever get back to this level. It has been 45 years since those highs. If you think about it, that's crazy high in the 1970s and 1980. And I do remember it being a mania. I know I've talked about on this podcast before, but it might have been years ago, the last time we were talking about gold really on here. And I do have childhood memories of going and hanging out in jewelry stores with my parents to buy some gold jewelry because of everything going on with gold. That was an easiest way to get access to gold. You could buy the coins as well or the bars. And today you can still buy all of those things. And you can even go buy some bars at Costco. They sell them, although I did hear that they had sold out of them last year in 2024 as gold kept rallying. But I think they're back in stock now. You can do all of that. But really, for me, the easiest way now to get access to gold is through the ETFs. You can buy the gold ETF to just own the physical gold, or you can buy the gold miners. And since we are a stock podcast, I'm not going to cover the physical gold. We are going to talk about the gold miners because when the price of gold rises, so should their free cash flows. And this is much like we've seen with energy and oil. In 2022, when Russia invaded Ukraine and the oil prices spiked up past $100 a barrel, all the energy companies, as long as they were getting it out of the ground and selling the oil, were having huge free cash flows. They were giving it back to the investors, their shareholders, in the forms of dividends or some share buybacks. They were doing base dividends and variables, depending on what was happening with the price at the time. All of the energy companies were mostly unhedged, and that means the unhedged part means that they were not buying contracts to hedge the price of oil. So if it falls too much, they have some protection. They were going unhedged because the price was rising so much and they wanted to capture that price rise. So the same is true for the gold producers. They are running unhedged right now. And why wouldn't you be with gold back above, or for the first time, above 3,000, but nearing those all-time highs again? But interestingly, most investors are ignoring the gold rally. Every podcast I've done on the Zacks Market Edge, where I've talked about gold, the gold miners, anything with gold, gold ETFs, nobody's cared and nobody's really listening in. So that's why I'm covering it now on the Value Investor Podcast, because that's a real sign of value. So I haven't been getting asked by anyone about gold. No Uber drivers or cab drivers have asked me about it. Neither have friends or family who know I work in the stock market. None of them are asking me about it. They continue to ask me about the Mag 7 or like NVIDIA. Should I be buying it after this sell-off? all of that is going on, but nobody said, hey, Tracey, I see gold is above 3,000. Should I be getting some? Should I be selling my jewelry? What should I be doing? And so that's a very much an intriguing value proposition now, because remember, value does occur when the market is ignoring it. And in this case, even especially when the fundamentals are strong. So we have the strong price and that continues to rise. It's not seemingly a mania. We haven't really seen a bubble behavior. We haven't seen all of this money coming into the ETFs, either the gold or the gold miners. Everybody's not jumping aboard yet. So this is still early in the process. And that makes, an interesting value proposition. So for this podcast, I did want to look at the cheap gold mining stocks. On Zacks.com, in the gold mining industry, there are 70 stocks. And those sometimes combine not just gold, but, gold and silver are in it. And because sometimes you're really not a pure play. Sometimes there's even the copper and some other types of metals are usually in there too. But in this case, we're hoping for some more pure plays just on the gold side, because we do just have, in the mining, we do just have gold. Over the year to date, total return for all the stocks in this industry, it's up 32.7%. The S&P 500 is down 1.5% in the same time period. Over the last year, it's up 48.9%. S&P up 12 now over that same period. But as you go longer out, the gold miners have not been performing as well. Over the 5-year period, they're up 60%. That doesn't sound too bad, but the S&P 500 is up 147% in that time period. So the real big rally has been over the last year, and we'll see how long this continues. But it's great at these levels for the miners because they are generating this huge cash flows and they're going to pay it back to us. So I may get some appreciation in these stocks, hopefully, fingers crossed, but I'm also hoping to get some dividends out of it, some special dividends like we saw with the oil stocks. And at one point, the highest yield on the oil stocks in 2022 into 2023 was 18% back to us. So we're not anywhere close to that with any of these companies right now. This is all fairly new, getting gold at these levels. But if it holds over 3,000 for the remainder even of 2025, that's just huge free cash flows for these companies. So how did I find the cheapest stocks? I didn't include any rank on the screen. I just looked under the gold miners for the industry. And then I chose a PE. I chose to use the price and earnings under 20. So I did keep it a little more elevated because I wasn't sure how cheap are these on a PE basis. Are there any that are under, say, 10? I didn't know. So I put it at 20, and it gave me 19 companies with just that very basic screen. So just gold mining, PE under 20. But I felt like that was still a lot, and I'm not sure we're going to get everything we really want to get just using the PE. Obviously, it gives us cheapness on a price to earnings basis, but I do want some growth. I mean, this is the time to be in gold mining, right? So I want something good to be going on there, but I didn't really want to use the Zacks rank to find rising earnings estimates right now. So I switched it over and I did a second screen with the gold miners using just the PEG ratio. And PEG, remember, is price, the PE over the growth rate. So we do get the growthy component in there. And I looked for 1 and under because a PEG under 1 gives us both the value side and growth. And that's kind of a rare combination. I didn't know how many we'd get. But given that we got 19 with the PE under 20, I thought we'd get, a decent number, and it did give me 8 stocks. So that's a nice number, 8 stocks. Again, no Zacks rank. Now, with the Zacks rank here in 2025, it's kind of been all over the place. And it doesn't have as high of Zacks ranks as you might imagine right now. And why is that? Currently, the gold industry is ranked in the bottom 41% of all industries. That seems strange because gold is rising. You would think the earnings would be rising. But as I mentioned, even with oil, you have to get it out of the ground and you have to sell it. And this is a very money intensive industry. And there's always a lot of things like with oil going on. You have labor issues, you have geographic issues, you can have wars break out, you can have weather, just a lot of things going on that they have to work through. And then they have to explore and try to find new gold mines and then invest in CapEx, the money to get that gold out. So there's a lot of things going on. And even though gold is at these highs, some of them have had some cuts to the estimates going into this year. And you're going to see that on the 3 we're going to talk about today. So let's jump right in. I did choose to only do 3 so that we could take like a little bit better look at these. And again, I didn't really get a choice here. I just chose the 3 cheapest on a PEG ratio basis on this screen. So the first, let's start. I'm changing my mind. I'm going to start with the most expensive one out of the 3. Now remember, these all have PEGs under 1. These 8 stocks did. So they're all cheap on a PEG basis. I'm also going to give you the PE on these because, that'll at least tell you, did this show up in our other screen and all of that stuff too. Okay, so the first stock out is Harmony Gold, ticker H as in Harry, M as in Mary, Y. This is a South African gold miner, and what their tagline says is Harmony is a gold mining specialist with a growing international copper footprint. So that's kind of intriguing if you are looking for something other than gold with a miner, because copper is hitting new highs now too. And so with copper, as a side metal, that could be a nice little added bonus. We have gold at all-time highs and now we have some copper too. Okay, so that's looking good. So they do mine in South Africa since 1950, Australia, and Papua New Guinea. This is not that big of a gold miner, market cap of just $8 billion. That is on the smaller side for a lot of these gold miners. There's been a lot of consolidation over the years because of just all the difficulties in being in this industry, and bigger is easier. So, and then if you need to find more gold mines, you don't want to go out there and just kind of test and explore. You just buy up a smaller gold miner that already has their own mines and you take those. So it is more unusual to see these smaller gold miners still out there. But Harmony is on the smaller side. What do the earnings look like for them? So fiscal 2025, they're on the fiscal year, expected to be up 10.2%. And then fiscal 2026, which is starting soon, a couple more months from now, but a little bit later this year, up 35.2%. So I am liking the earnings growth on Harmony here. I did take a look at what they last reported, and because they're South African, it was the 6-month reports. We don't have many estimates on this one. We only have one estimate. It was lowered in the last 30 days. So that's what I mean about the Zacks rank on some of these. We have no quarterly estimates with Harmony. We only have the year. That does show up in the rank. But if our one analyst who's covering this, lowers for whatever reason, you're going to get the lower rank. And Harmony right now is a number 4 sell. So for that reason, because this one analyst is lowering. But on March 4th, they did give their 6-month update, which was through the end of December 2024. So that's the first half of their fiscal year. And they saw a 19% increase in their group gold revenue to almost $2 billion in US dollars. Their operating free cash flow was up 46% to $579 million, driven, of course, by the high average gold price. They did see a record interim dividend per share of 7.6 US cents, but I have on Zacks that they're paying 9 cents. Now, when you get a foreign country, when you get a dividend like this, South Africa does withhold 20% for the foreign income tax off of there. So I'm not sure that the 9 cents might be before the withholding. And so that's something to keep in mind. Or maybe this is after and it was higher at like around 12% or 11%, or 11 cents, I should say. But this dividend is yielding 0.7%. They saw a 23% increase in the average gold price received. So this is why I like the gold miners right here. So they saw $2,437 an ounce in that 6-month period versus $1,900 the year before. But gold production fell 4%. And that was planned. This is what I mean. You have to see what's going on with each company and where they do see production. Now, even with falling production, if the price of gold keeps going up, even just 5 or 10%, so will their revenue, as long as they're getting it out of the ground, and they will develop more free cash flow, even with production, stymied a bit. But Harmony, PEG ratio of 0.7, PE of 11.7 right here. So Harmony Gold, ticker HMY, this is South Africa. That's pretty cheap on both measures. And again, something else to keep in mind, a lot of these are hitting new highs on the stock. And that would make some sense with the big surge in the industry with the returns there. And I see Harmony, which is trading at $12.50 when I'm recording this on March 26, 2025, is trading near its year-to-date highs here. And let me just look. Yes, at 1-year highs as well. So I'm assuming it's at multi-year highs here. But been very choppy, up and down, follows the price of gold like a lot of the oil stocks do when gold pulls back. And if or when it pulls back below 3,000, that will be a key level again. It's just sitting right above it. But when it falls, or if it does, back below 3, I would expect some pressure on the gold mining stocks because a lot of people are just trading these. But could be a good buying opportunity when or if it falls back again. So that's the third cheapest stock. What's number 2? It is Newmont. And Newmont is the Denver-based big gold mining giant, market cap of $52.8 billion. PEG is just 0.46. So we've gone from 0.7 to 0.46. PE of 15.8, so a little bit higher on the PE. And on their recent report, they said 2024 was a transformational year. They did integrate the Newcrest portfolio, and now they consider themselves to have the world's best collection of Tier 1 gold assets. They had a record Q4, which they said gave a glimpse into the promising potential coming up. Average realized gold price for them was also up 23%, just like Harmony, to $2,408 from $2,004 from the year ago period. Q4 average realized gains, though, that was for the year. The Q4, as gold was rising through last quarter, was $2,643 per ounce, and that was up $125 from the prior quarter. What will it be this quarter? We're still in it. We're still in first quarter. We're just about to end it. And we only just went over the 3,000, but we definitely have been over 2,643 for basically the entire quarter. So it is going to be higher again here in Q1. Now, Newmont has mines just about everywhere: Africa, Australia, Latin America and the Caribbean, North America, and Papua New Guinea. So they're all over. You're going to get exposure everywhere. So for 2025, however, earnings expected to be down 14.7%, and pretty significant cuts here from 348 down to 297. Well, that's not cuts, but they have been cutting, but it's been mixed. The analysts trying to get in line with what the company is seeing. And then 2026, they see a reversal up 11% there. Dividend is $1 a share right now, and that is yielding 2.1%. I don't remember if they have just the base and then they're doing some kind of variable, but for right now, you are getting this $1. Newmont also pretty active on the stock. Let's see where that one stands. Yeah, that's near its year-to-date high, but again, it's kind of been up and down, not quite as volatile as what Harmony was, because that's a smaller cap stock, not in as many people's wheelhouses as Newmont, which is much better known. But these shares are not near last year's highs. So we still have a ways to go back to get to those one-year highs. And a lot of these companies, again, it's on execution. The stock, they did miss 2 quarters ago. And, when they don't execute and they're like, we're having some troubles at this mine or that, and we maybe are cutting our guidance, or, we're pulling back in some areas, then the market will sell off these stocks, as I mentioned, and you do get the pullbacks. So it's gotten cheaper than it has been before. And this one is one of the big guys, and it's the second cheapest of the gold miners right here. So that's Newmont, ticker N as in Nancy, E as in Edward, M as in Mary. And then the cheapest of them all, and I had no idea this is the cheapest one. I own it in Zacks Value Investor and in my own personal portfolio now. It's B2, B as in boy, 2, the number 2, gold. B2 Gold, ticker B as in boy, T as in Tom, G as in George. And this is the cheapest on a PEG ratio basis. It has a PEG of just 0.2, a PE of 8.3. So both of those are really cheap. And a market cap of just 4.1 billion. So this is one of the junior miners, and it's on the small side. And that's why not as many people know about it. It is a stock under $5. So be warned, you're definitely getting the volatility with this one. Here on March 26th, it is trading at $3.10 now. 52-week low is at $2.20. 52-week high is at $3.50. So it's been trading in this, kind of narrow range for a while. But with gold now breaking out again, it has been moving higher to new highs here in 2025. This does pay a dividend now, even though it's a junior miner. It is paying 8 cents a share right now, which is a yield of 2.6% or 2.5, 2.6. And they are a Canada based miner. So I didn't choose this, obviously, but we have 3 from 3 different parts of the world. So that's also interesting. They're in Vancouver. They were founded in 2007. And these are the countries they are in: Mali, Namibia, the Philippines, and they have a new project called the Goose Project under construction in northern Canada. And they're expecting the first gold on the Goose Project, which is what has analysts excited, in the second quarter of 2025. That's coming up, second quarter of 2025. If they stay on this but they did say last quarter, this is what they're seeing with commercial production in the third quarter of 2025. So that's going to go right to the bottom line once they are, producing it and getting it out of the ground. So I'm liking all of that. So are the analysts. 2025 earnings expected to be up 137%. So they made 16 cents last year, expected to make 38 cents. I think this because the analysts are now pricing in some of the production from this Goose project. And then 2026 right now, down a little bit, but just a penny to 37 cents because no one knows that far in advance. With a small miner like this, they're not really thinking about 2026 yet. So we'll see as we go along with 2026. But as of December 31st, 2024, they did have a nice cash cushion of $337 million. And so this is true of all of them. I didn't give you Newmont's cash, but it's pretty significant. And they also have a large amount of liquidity they're able to tap. So all of them, if you look up and down, they all are seeing just this huge cash infusion with gold at these levels. Average realized gold price for 2024 for B2 Gold was $2,353 versus $1,944 in 2023. So not quite as high as some of the others, but Q4 was very nice at $2,658 versus $1,991. So they also saw pretty good in the 2,600 and above for Q4. That's added to their cash, as I said. And then they're expecting, or we all are expecting it to be even higher here in Q1, as long as they're getting it out of the ground. So that's, again, always the key. And this is why it's hard to pick on the gold stocks. If some of you are in my value investor portfolio, you know we were in Barrick last year and we got taken out of it basically when all of the gold miners sold off after some of these execution issues. In the fourth quarter of last year. And so we got out of that. And now we are in B2 Gold, where we're trying another. So if you're not really interested in just, picking and choosing and figuring out who's where, who's having trouble getting it out of the ground, who is paying, the variables and all of this other stuff, and you don't want to pay attention on the conference calls or know what's happening, then there is the ETF. You can just go and buy all the miners in one thing. And this has always been a popular ETF. And it is the Van Eck Gold Miners ETF, just ticker GDX. And I do recommend just buying the regular one. There is a junior one too, if you're willing to have a little bit more volatility, but there's not as many of the junior miners anymore. So a lot of them have been absorbed into the big miners. So it's fine just going with the big miners here. Again, they have scale, they've got the cash, and they're going to give it back to us in the form of dividends, which you'll get also in the ETF. So keep that in mind if you don't want to do individual stocks, because it is a little more risky there, because you can have, something happening on the execution side with any of these companies. And that takes away a little bit of the risk if you buy the bulk of them in the ETF. So let me recap the stock tickers. So our third cheapest, again, was Harmony from South Africa, ticker HMY. Then we had Newmont, the big US producer, and you'll get a bunch of other metals also with Newmont. It's not just gold there. So if you're interested in that, go with some of these big guys, ticker N as in Nancy, E as in Edward, M as in Mary. Then the small guy is the cheapest, B2 Gold, ticker B as in boy, T as in Tom, G as in George. But we're waiting on that Goose project. Fingers crossed, we'll see. And we'll see how cheap they remain if that actually comes through. So They are the cheapest with that peg of just 0.2. Remember, pegs under 1 are value and growth. So I'm liking any of these names. And again, there was 8 on the screen that had pegs under 1. They were all other names you would probably recognize if you know the gold miners. We're talking about the big gold miners there. So run the screens. You can run the same screen on Zacks.com. Nothing stopping you from checking it out there as well for yourself. And keep some of these on your watch list because nobody else is talking about them, but I will. And I'm liking the gold trade here in 2025, at least until everyone else figures it out. It's cheap and it's very bullish right now on the gold side. So be sure to subscribe to get all of our podcasts here on the Value Investor Podcast. A lot is going on. I will cover the banks soon, I promise. I know you hate those too, but I will cover those. So be sure to get us on Apple. We are on Amazon Music. We're on Spotify. We are on YouTube. Go to Zacks Podcasts and find us on YouTube, along with the ETF Spotlight over on our YouTube podcast channel, because Nina's covering all of this stuff as well. But be sure to get us somewhere, and I'll see you again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.